Palantir Technologies delivered an assertive and highly confident message during its Q1 earnings call, led by Chief Executive Officer Alex Karp. In what could be described as one of the most energetic and bullish updates in recent memory, Karp did not hold back in expressing his belief that the company has reached a defining inflection point. Citing strong performance in the United States and accelerating global adoption of the firm's artificial intelligence-powered offerings, Karp proudly declared that Palantir is, in his words, on fire. He highlighted an extraordinary 71% year-over-year increase in United States commercial revenue as a clear sign that the company's strategic positioning is paying off. Karp attributed the company's remarkable results to more than just technological breakthroughs. He emphasized that the foundation for this momentum is rooted in 2 full decades of continuous investment and a sweeping cultural transformation within the United States itself. According to him, the firm's current trajectory reflects not just superior engineering, but also a deep alignment with the pressing needs and evolving priorities of government agencies and large-scale enterprises. He added that Palantir's platforms are increasingly being deployed to address the most critical and complex challenges facing its clients across the public and private sectors. One of the most notable operational milestones Palantir has achieved recently is reaching full production capability for the Titan initiative with the United States Army. This development marks a pivotal moment in the company's defense sector operations. Beyond the Army, adoption of Palantir's offerings is expanding rapidly across other major entities, including additional branches of the Department of Defense, allies within the North Atlantic Treaty Organization, and a growing list of Fortune 500 companies. According to Karp, the demand for the firm's Maven software suite has witnessed rapid acceleration, not only within the borders of the United States, but also among international customers. This global uptick in adoption underscores the company's expanding footprint and the increasing relevance of its artificial intelligence-driven technologies in mission-critical environments. At the heart of Palantir's product portfolio is its proprietary artificial intelligence platform, commonly known as AIP. This platform is designed to enable users to deploy intelligent agents that are tightly integrated with their operational workflows. These agents are not just add-ons. They are embedded deeply into everyday decision-making and data analysis. Karp explained that these AI agents deliver exceptional value to clients, value that far exceeds the cost of implementation. This performance has created a high level of customer retention and has driven continued expansion across both government and commercial clients. When faced with questions about ongoing budgetary constraints in Washington, including the possibility of cutbacks within the Department of Defense, Karp welcomed the scrutiny rather than dodging it. He stated that Palantir thrives under pressure, and that real value is often revealed when systems are rigorously tested. In his view, fiscal tightening serves as an opportunity for highly effective vendors, those who can demonstrate measurable and meaningful results, to stand apart from less impactful competitors. Karp argued that when underperforming programs are downsized, companies like Palantir that offer concrete impact rise to the top. Karp also addressed long-standing skepticism about the company's journey into the corporate mainstream. In a candid moment, he admitted that Palantir was once considered an outlier, but said that the situation has changed dramatically. What was once labeled a sideshow is now fully engaged across both governmental and non-governmental sectors. He emphasized that modern enterprise clients are guided by performance and accountability. They now seek out the highest quality tools, implement those tools at scale, and expect top-tier ethics and operational execution. According to Karp, Palantir is delivering on all these fronts, and that shift in perception is fueling further growth. While the company is witnessing strong momentum in many regions, challenges remain. Karp singled out continental Europe as a region that continues to lag in terms of artificial intelligence adoption. He noted that many stakeholders there still struggle to grasp the transformative potential of artificial intelligence technologies. Nevertheless, he pointed out that 90% of Palantir's revenue is now concentrated in higher growth markets outside of continental Europe. Excluding that region, the firm's business has expanded by 49%, an indicator of robust underlying growth across more receptive global territories. As the company looks to the future, Karp stressed a focus on execution and delivery over promotional hype. He conveyed that the leadership team is keeping its attention squarely on performance, ensuring that Palantir's top talent is strategically managed and that every deployment delivers tangible results. The company's aim is not simply to be part of the artificial intelligence trend, but to be the driver of a real transformative change for its customers and partners. Financially, Palantir reported strong earnings results for Q1. The company posted posted adjusted earnings of 13 cents per share, and total revenue reached $884 million. These figures not only beat Wall Street expectations, but also led the company to revise its full-year forecast upward. He argued that reaching such a threshold is extremely challenging and serves as a testament to the high quality of Palantir's revenue base. In a separate development, Palantir received a major endorsement from Dan Ives, a prominent analyst at Wedbush Securities. On the 6th of May, 2025, Ives increased his price target for Palantir stock from $120 to $140 while maintaining an outperform rating. He described the company as a generational technology name that investors should hold. This upgrade had ripple effects even extending into the cryptocurrency sector and influencing broader sentiment within the artificial intelligence space. Following the release of earnings, Palantir stock experienced a dip in after-hours trading. However, Ives appeared on CNBC's program Closing Bell Overtime, alongside Jefferies analyst Brent Thill to discuss the results. While Thill raised concerns about Palantir's valuation, Ives stood firm in his bullish perspective. He noted that critics have disliked the stock at $30, disapproved of it at $50, and considered it overpriced at valuations above $100. Yet in Ives' view, Palantir continues to lead the artificial intelligence revolution. He maintained his outperform rating and projected that the company could reach a $1 trillion market capitalization within 2 to 3 years. Ives also pointed out that retail investors were quicker than institutional players in recognizing Palantir's value and potential. Brent Thill, however, maintained his underperform rating. He stated that in all his years of software coverage, he has never seen a stock trade at such high multiples and continue to sustain those levels. RBC Capital echoed a similar sentiment by also maintaining its underperform rating for Palantir stock with a firm price target of $40. Despite recognizing the company's impressive performance in the recent quarter, including a gross profit margin of 80.25% and revenue growth of 28.79%, RBC analysts remained cautious. The company's stock price dropped roughly 8% after the market closed, even though it has delivered a staggering 391% return over the past 12 months. RBC Capital acknowledged that the government segment outperformed expectations, but the commercial side slightly underdelivered, reinforcing doubts about Palantir's growth trajectory and product differentiation. Data from Investing Pro revealed that Palantir stock currently trades at premium valuations, including a price-to-earnings ratio of 505.76 times and a price-to-book ratio of 58.37 times. RBC analysts also scrutinized the company's updated outlook for 2025. While the revised guidance exceeds consensus estimates, they questioned whether these optimistic forecasts are already priced into the stock. The firm maintains that the current risk-reward dynamic does not favor further investment, especially when considering how highly valued the stock already is. They remain doubtful that Palantir can continue to justify its elevated valuation multiples without clearer visibility into sustained long-term growth. In the end, Palantir Technologies reported strong Q1 results, with adjusted earnings of 13 cents per share on $884 million in revenue, reflecting significant momentum in the United States, including a 71% year-over-year surge in commercial revenue. Chief Executive Officer Alex Karp attributed this growth to 2 decades of investment and a cultural shift, highlighting expanded adoption across defense agencies, North Atlantic Treaty Organization allies, and Fortune 500 companies. Despite challenges in continental Europe, Palantir's revenue is now heavily concentrated in high-growth markets, and its proprietary artificial intelligence platform is driving deeper client engagement. While analysts like Dan Ives raised their price targets and projected a potential $1 trillion valuation within a few years, others, including RBC Capital, maintained a cautious stance, citing concerns over valuation and the company's ability to sustain such premium multiples. Nonetheless, Palantir remains a dominant force in artificial intelligence and data analytics, positioning itself for further growth despite mixed market reactions. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.